Welcome back to Radio Entrepreneurs. I'm Jonathan Freedman alongside Jonathan Penta of Penta Wealth Management. Nice to see you as always.
Thanks for having me, John.
It's a pleasure, and I'll introduce our next guest up is Sanjay Ahuja, President of Sunbelt Business Advisors. Welcome, Sanjay.
Thank you, Jonathan.
It's a pleasure to have you on Radio Entrepreneurs. Tell us a little bit about your business and what it is that you guys do.
Sure. So, as I was kidding earlier, Sunbelt is the premier firm that specializes in selling small businesses. And by small businesses, I mean really small, less than $20 million in revenue. We call ourselves as the Goldman Sachs of the Main Street business. There are lots of small businesses, as you know, in the country. 98 or 99% of the businesses are under 20 million in revenue. And what we've seen is they don't get enough professional care in terms of representing them, in terms of helping them understand business owners who are ready to retire, what value have they built up in their companies, and how best can they be marketed, what sort of buyer would be the right buyer for something that they may have spent 20, 30 years building. You know, it's a legacy in a lot of cases. So Sunbelt's been in this business about 30 years. We have 250 offices across the country. I run the Massachusetts and Rhode Island office for Sunbelt, and we do about 3,000 transactions a year.
Wow. In this market?
In this market. And it's actually around the world now. Yeah.
That's amazing. So any particular sectors that you focus on, any particular businesses? You said small business, but that is, as you also admitted, represents about 98% of the businesses out there. So
Yeah.
you know, across every industry? Or?
Yep, it's industry agnostic. The process that we've developed works across industry. And in fact, that's one of the things we look for in people who run Sunbelt offices is people with a wide variety of experience. So that they can represent different industries and learn really fast. That's really key because you don't, no matter how much you've done before, you won't know everything. You got to go there and learn the business really fast so that you're then able to represent it in the right way to the buyers.
Any particular trends that you've seen over the last decade in the industry? I would imagine, there's some cyclicality to it associated with, how the general economy is doing and, people
Sure.
looking to cash out.
Yeah, so not so much in the last decade. I think 2008, 2009 was unique for every industry, especially in our industry because most of the acquisitions depend on raising finances, and money just disappeared in 2008 and 2009. We've had recessions before, but it was never that bad in terms of liquidity. So new creative approaches did come up. We saw, and that's still evolving in the last 10 years, where deals have happened not necessarily just with SBA-backed loans or bank financing, a lot of earn-outs or seller financing, a lot of creative approaches came up during that time, which have stayed with us in the last 10 years. I think that's probably been an innovation in the industry.
One of the things that I think, from the outside perspective that seemed to be a tremendous challenge in your business is the reconciliation between desire and reality of a seller.
Mm-hmm.
And how do you close that gap or bridge that gap? Is that something that you often run into, this belief that my business is worth a lot more than the market will pay?
Sure, yeah. So, before I got into this business, in my previous life, I was in corporate America, growing and climbing up the corporate ladder for 25 years. And in that life, I dealt a lot with these expectations because we were, acquiring, divesting businesses. Generally, we would acquire larger firms, at least $30 million in valuation. And there used to be differences in terms of how people perceived the value of their firm versus what the reality was. In case of small businesses, most owners don't even know, what the value is. So when they first called me, the very first question is, what do you think it's worth? And then we have to go through, an exercise to come to a valuation. So that I don't find that as a typical gap. What I find as a gap in this segment instead is, many a times people have created great jobs for themselves, but not a business that can be sold.
Hmm.
And, a job can be sold, but you need somebody else who will then acquire it as a job. And one of the biggest mistakes or issues or gaps that I see is where people have built a wonderful organization, so to say, but it's not a business. It's just a job, And so that's number one. And then number two, right after that would be not marketing it in the right way. So the best way to sell a business or to sell anything for that matter is to build competition for it, right? You got to create competition for it. And so when we take up a business, that's what we do, is create competition. So there's bidding for it. First of all, it has to be a business. If it's a job, then you either keep it that way or we'll help them evolve it to a business. Once it evolves to a business, then you got to create a competition for it. Number of situations where people have called me where they've received offers, like recently I had a call where somebody had received a $5 million offer from a buyer and they didn't know how to go about, so they wanted my service to think about, helping them figure out whether that's the right offer and how do we go about. We got involved and, that offer went up almost 40%. And there was some post-closing benefit as well in terms of employment for the
Covered
owner.
your fee.
more than covered my fee. But my point is, and it could have been much more. Now, when you're negotiating with somebody who's already offered you, a number,
Sure.
they're only going to go up a small figure beyond that. But I really feel that could have been much more. But the problem there was when the first offer came in, they almost accepted it. There was no competition involved.
Right.
What we had to do was take it out to the market, get other people interested, and then once the original bidder started seeing that there is more interest, they went up in price. So that's the second gap usually I see, which is people don't know, first of all, is it a business? And if it's a business, how do I market it? Have I done the right things?
Yeah, you're speaking my language right now. In terms of the valuation process you mentioned, so do you typically, does Sunbelt do that internally? Do you outsource that to business valuation advisor?
Both. So that again depends on the size of the business and the complexity of the business. What we start off with before we take any representation, we will do an opinion of value, which is not a formal valuation, but we'll use 2-3 different methods to give them an idea or a range of what the price should be. Also, we'll look at market comparables of similar businesses in the industry that have sold, and do the pluses and minuses to the baseline to come up with a price. So that's the most common way of coming to an opinion of price. And only if there is a match between, to your point about perceptions, only if there's a match between what they were expecting, if they had an expectation, and what we came up with, then we take that representation. So we have to do that anyway before we take a representation to ensure that we've normalized the financials. See, that's the other thing that I saw, was pretty...
The personal piggy bank.
It was very different from, when you're dealing with... larger companies, you have GAAP financials, and the whole purpose of a large company, a public company, is to maximize its earnings. I was listening to CNBC as I got in here, and Beyond Meat just announced their results, and it was great, more than analyst expectations. So the board, the management team of a large company is there to maximize their earnings all the time. If the earnings, doesn't meet expectations, they'll get fired. Right. Stock's going to crash. On the other hand, smaller companies operate differently. The whole purpose is to minimize earnings because it's about, paying as less in tax as possible, right? So the first thing we have to do is normalize earnings. So what should it be? right? What is the true cash flow out of this business that a new buyer, when they buy that business, would get out of it? So after normalizing, then we do the valuation of, applying different methods to come to a price.
So what percent of your, what percent of the transactions that you get involved with are buyers versus sellers? Is it equal? Is it more common one way or the other for your company?
So it's mostly sellers, but we also get involved with buyers. And that's, to your question earlier about trends in the last 10 years. So on the buy side, that's something we've seen. Now, when you talk about buyers, there are three types of buyers. There's the individual buyer, the financial buyer, private equity typically, or search funds, and then the strategic buyer, another company, from the same industry, adjacencies, interested in buying. If the business is a job, then obviously it's an individual who's buying. And if it's a business, then all three classes of buyers would be interested. With individuals, we're seeing a lot of corporate executives in the marketplace, people who've probably worked for 20 years, 30 years, have reached a milestone, or maybe have got laid off. They've accumulated a good amount of capital, but they're not ready to retire. So they could be 45, 50 years of age, another 10, 15 years of runway before they actually retire. And they're looking for businesses. They're looking for, they've had a dream of the American dream of being independent and doing something on their own. And so we work with them. And the best way that we can place them is first of all, find their niche. And then secondly, get them something in the range of $200,000 to $500,000 in valuation. That's a small company. It's, easier for them to get involved for the first time, learn something new. And then, if they're ambitious, they can go and buy out the competitors in that space and scale it up and become bigger and
Add-ons
bigger. Add-ons and become bigger and bigger. The advantage of that strategy is once you go beyond $1 million in valuation, there's a lot of competition. Private equity gets involved in that space. Strategic buyers get involved in that space. It becomes tough for individual buyers to be able to win the bids, right? Because a seller would prefer it to go, to sell it to a strategic buyer or to private equity, and they have enough liquidity available with them to outbid an individual. So it becomes difficult, and especially if somebody doesn't have experience, it's difficult for them to, win an opportunity like that. But if we get them into the smaller businesses, and then, of course, they have ambitions and they want something more than $1 million in cash flow. You can do that by making a couple of more acquisitions in that same space and build up something good. So on the buy side, we do get involved and help people out with those kind of strategies.
Great.
Interesting. Well, fascinating stuff. I think it would be great to have one of your success stories come on and talk about a case study about how they worked with you and the type of work that you did. But really, really fascinating. 250 locations around the country. Is there a market you guys don't touch? I'm trying to think where you end up at 250.
Well, geographically, I think we're almost everywhere, but we typically don't go beyond $20 million in revenue. So
So up to $20 million in
up
revenue.
to $20 million in revenue. Well, we've done deals in the past which are larger, but that's not where our sweet spot is. That's where investment banking gets involved, and there's a lot of competition in that space.
So as you said, there's obviously a ton of transactions in your space. The key is to vet them out and to find where they're at. But it's the main street. It's the insurance company or the pizza shop or the the restaurants and retail locations and
it's also
business services.
It's also low mid markets. It's also industrial. It's also wholesaling, distribution, machine shops, light manufacturing. Like I'm representing a consumer products company that is one of the leaders in plastic products. So there's a mix.
It's really diverse.
It's a mix. So there's a lot of Main Street mom and pop retail as we know it. but there is also industrial and manufacturing and wholesale in that space.
Which is really where the fascinating stuff comes in. You go, wow, I had no idea these guys were doing this in our backyard.
Yeah, and which is why I said you got to be a fast learner.
Yeah.
You know, it's like there's only so much you can know, but every time you go out, there's a client who's doing something different, something unique, and you got to, catch on and learn that really fast.
Wonderful. It's been a pleasure having you on, Sanjay. If somebody wants to get in touch with you and talk about your services, what's the best way for our listeners to reach you?
Yep, so sunbeltnetwork.com, and they can look for the Boston office once they get there, or if you just Google search Sunbelt Business Brokers Boston, you will find our website, or they can even call me at 857-400-8420.
Excellent. Our guest has been Sanjay Ahuja, president of Sunbelt Business Advisors, and it's been a pleasure having you on Radio Entrepreneurs.
Thank you, Jonathan.
And Jonathan Penta of Penta Wealth Management and I will be back with another guest shortly on Radio Entrepreneurs.